السلام عليكم. النهاردة هنكمل chapter 2 The statement of financial position, a financial starting point. The statement of financial position represents a summary of all financial transactions up to the balance sheet date and the starting point for all future financial transactions. The financial starting point. Opening financial position, assets, liabilities, and capital. Future financial transactions. Sales, receipts and payments for the next accounting period. Each asset, liability, and capital item shown in the statement of financial position is an account in the business nominal ledger. As a financial starting point, the statement of financial position account values will be the opening account balances ready for the following period's financial transactions. Bank and cash accounts. The business bank and cash accounts are usually having the highest number of transactions. Bank and cash balances also represent the most liquid of assets in the ledger, requiring careful management, control, security, and responsibility. The bookkeeping T account is a tool used to keep detailed records of specific or individual account transactions. The business cash account will be used to record the cash receipt and payment transactions of the business. Example 3. Accounting for bank transactions. Enter the opening balance into the cash T account of Committee from the statement of financial position. Update your cash T account with the cash transaction of C described below. 1st October, received cash from sales $650 and paid $220 in cash for purchases. 2nd October, received cash from sales of $560 and paid business expenses $180 and repairs $60 by cash. 3rd October, received cash from sales of $410 and paid cash for purchases $380. 4th October, received cash from sales of $680 and paid $730 in cash for employee wages. 5th October, received cash from sales of $740, withdrew $400 in cash for C personal use or drawings, and took $1,000 cash and deposited it into the business account. C cash account. In 1st October, the balance brought down increased the cash by $200, so it will be debited. Also in 1st October, the cash increased by $630 because of sales, and also decreased because of purchases by $220. In 2nd October, the cash increased because of sales by $560, and also the cash decreased because of expenses by $180 and repairs by $60. In 3rd October, the cash increase because of sales by $410 and also the cash decrease because of purchases by $380. In 4th October, the cash increase because of sales by $680 and the cash decrease because of wages by $730. In 5th October, the cash increase because of sales by $740 and also in 5th October, the cash decreased because of drawing by 400 and bank account by 1000. To make the balances equal, the debit side and the credit side, so in the credit side it will be the balance carried down by $250. So the totals will be the debit side $3,220 and the same in the credit side. So the balance brought down will equal $250. The balance on account. The balance on the cash account will be established as the opening balance, add receipts less payments for the period. Balancing a T account or cash and bringing the balance down, technical procedures. Add up the debit entries, opening balance and receipts. Add up the credit entries or payments. Creating a balancing entry, debits less credits, the balance carry down. Balance the accounts, debits equal credits. Bring the balance down, the remaining cash to start of next period, balance brought down. The balance on any account is the difference between the total debits and the total credits. Example 3, B and C, accounting for bank transactions. 7th October, received cash from sales $486. 8th October, received cash from sales of $227 and paid $126 in cash for purchases. 9th October, received cash from sales of $744 and paid cash for business expenses $77. 10th October, received cash from sales of $161, paid $392 in cash for purchases and $730 for employee wages. 11th October, received cash from sales of $632 and withdraw $400 in cash for C personal use. 12th October, deposited $575 cash into the business bank account. On 6th October, the balance brought down equal $250 brought from the example 3A. On 7th October, the cash increased because of sales by $486 and there is no decrease in cash. On 8 October, the cash increased because of sales by $227 and the cash decreased because of purchases by $126. On 9 October, the sales increased the cash by $744 and the expenses decreased the cash by $77. On 10 October, the cash increased because of sales by $161 and also the cash decreased because of purchases by $392 and because of wages by $730. On 11 October, the cash increased because of sales by $632 and also the cash decreased because of drawing by $400. On 12 October, there is no increase in cash, but there is a decrease in cash because of bank account by $575. The difference between the debit side and the credit side is the balance carry down, which is $200. So the debit side and the credit side must be equal to $2,500. So the balance brought down will equal $200. The business bank account. The business bank account shows receipts and payments as dealt with through a third-party business contact the business bank. Documentation. All transactions raise documentation. Checks or electronic transfer. The bank statement. Bank overdraft. The bank account may be a current assets or debit balances, current liability or credit balances based on agreement with the bank. Balance brought down. Balance brought down as opening balance of ledger pulled from previous accounting period. Balance carried down. Balance carried down as the closing balance of a ledger pushed to the next accounting period. The bank cash book. The bank cash book combines the accounting records for both the bank and the cash accounts into a single two-column book. Liquid assets or bank and cash accounts. The most liquid of all business accounts, requiring strong internal controls. The finance office. Liquid assets are separately controlled. Specific authority and responsibility. Contra entries. Transfers between the bank and cash accounts. Post entries made within the same book. Example 5. Bank cash book transactions. Each had the following opening balances on 1st May. Bank $1,250. Debit brought down. Cash $200. The following cash and bank transactions took place during the first week of May. 1st May, cash sales of $650 and cash purchases of $285. 2nd May, cash sales of $360 paid by electronic funds transfer, rent $1,100, and J, a creditor $650. 3rd May, received $875 from R, a debitor, directly to the business bank account, paid for advertising by bank $940, and cash purchases of $180. 4th May, $440 received in cash for sales, paid insurance expenses $820, and J, a creditor $480. Both payments being made by electronic funds transfer. 5th May, received $780 from K and $485 from P, both debitors. Paid $135 for repairs by cash, and H also made withdrawals for her own personal use. $200 in cash and from the business bank account. 6th May, transferred $600 from cash to the business bank account. Required: update the bank cash book of H with transactions described above and bring the cash and bank balances brought down at 6 and 7 of May. On 1st May, opening balance increased the cash by $200 and also increased the bank account by $1,250. Also on 1st May, the cash increased because of sales by $650, and also the cash decreased because of purchases by $285. 2nd May, the cash increased because of sales by $360, and the bank account decreased because of rent by $1,100 and creditor J for $650. 3rd May, the bank account decreased by $875, and also the bank account decreased because of advertising expenses by $940, and also the cash account decreased because of purchases by $180. 4th May, the cash account increased because of sales by $440, and the bank account decreased because of insurance expenses by $820, and creditor J for $480. 5th May. The bank account increased because of debitor K by $780, and also the bank account increased because of debitor P $485. Also on 5th May, the cash account decreased because of repairs expense by $135 and drawing by $200, and the bank account decreased because of bank account by $500. 6th May. Cash contra increased the bank account by $600, and also the bank contra decreased the cash account by $600. The balance carried down in the bank debit column will equal $500, and the balance carried down in the cash credit column will equal $250. We must total the columns. The cash column total equal $1,650, and the same in the cash credit column. The bank debit column will be $4,490, and the same as bank credit column. So the balance brought down in the cash debit column will equal $250, and the balance brought down in the bank credit column will equal $500.